Hey everyone, it's your main man Lee Kendrick at CreditUturn coming to you live Wednesday, March 4th, 2020. Today's a great day. Hopefully it's been a great day for you as well. And just going to kind of riff here for a minute until somebody can tell me that they see me and that they hear me okay. And then we'll know that the internets are all linking up and everything's fine and wonderful in the world, and we can continue on bringing you some fantastic credit goodness straight from CreditUturn tonight. So I've got one yay that says that we're live and can see me okay. And before I forget, if you don't mind, drop a link to our website to CreditUturn.com, just in case you are a new visitor to our live stream series. We're currently streaming on YouTube. We will be switching over to where we'll live stream directly from multiple platforms like Twitter and Facebook and YouTube and Instagram all simultaneously. That just hasn't happened yet, but we are working on that. So tonight's topic is, why did my credit scores drop? Okay, and I'm not coming to you tonight talking about that, hey, that's something that CreditUturn hears a lot, because it really isn't something that we hear a lot, but that's a predominant theme across the entire credit landscape on the good old interwebs. So everywhere that you look out there in credit forums, people are always saying, hey, I paid down some debt, or nothing changed on my credit report, and I don't know why, but my credit scores have dropped. So we'll cover that in great in-depth detail here in just a moment, because that is a fantastic topic, and it's top of most people's minds, especially somebody that has been trying to improve their credit rating. So we'll get to that here momentarily. Before we do, I always want to thank our partners again, especially our automotive partners. Our automotive partners that join up as a CreditUturn partner are typically world changers. They're difference makers. They've been in business for a long time. Auto dealers are not bad people. I'm going to tell you that right now. Auto dealers make a significant investment in their buildings and their land. They are not intentionally trying to make you mad. They're not intentionally trying to, piss you off, basically, because you couldn't get the deal you wanted, or they didn't take care of you the right way. There are hiccups that happen, but I promise you, they did not invest millions of dollars into a building and land, and then the ongoing advertising and the goodwill that they put forth in communities unless they cared, okay? Now, are there differences between auto dealers? Yes. The auto dealers that really get it are the ones that identify that there are problems out there in the world that are sometimes bigger than the individual, and they realize that sometimes it just takes one event, like a job loss or divorce or a medical crisis or something like that, to snowball and get out of control, and that can cause you to have some credit issues, because every dealership owner, every general manager, every sales manager, every finance manager, every salesperson, every person that works in the service and parts department in their offices knows somebody that's close to them, if not themselves, that have had some sort of challenge, and they're always going to them and saying, hey, I've got some credit issues, can you help me get a car? I've got some credit issues, can you help me get a better deal? That kind of thing. So they know people, and the ones that really care are the ones that want to make a difference, and they want to give back, and they stumbled across us, or they heard about us through social media, or maybe through one of our outside reps, and they heard about our services, and they said, we're in. We want in. We don't even care if we sell a car. We just want to give back to the community, because it's such a low investment just to ensure that you don't have to pay any credit repair fees. And that's very powerful. However, there are dealers out there that try us out for a week or 2 weeks or a month, and they're like, we haven't sold any cars yet. The sky's falling. And it's not necessarily that way. So I have to have those conversations with those dealers sometimes, saying, hey, is this really a good fit for you? Because if you're not that type of dealer that genuinely cares about the customer, maybe it's not a good partnership to be in. But if you are that type of dealer that's been around for a long time, you're the fabric of your community, and you truly see something, a way that you can give back to your community, and that will turn into more car deals for you. You just got to play a little bit of a long game. Could it result in a few immediate car deals? Yes. But again, if you're one of those dealer partners and you're watching this, please stay with it. Join, but join for the right reasons. Join to actually help make the world a better place, to leave it better than you found it. So again, I want to thank our partners that do change the world, that want to make a difference. And for those partners, the ones that you do see that are a CreditUturn dealer, like their pages, follow their pages, be loyal to them, tell them that you appreciate what they're doing for you and also for the communities, and what a difference the CreditUturn mobile app has made in your life. So I'm sure that they would appreciate hearing that. Also on that note, just a shameless plug, if you would, hopefully you see that I care. Hopefully you see that I'm very passionate. This is kind of my ministry, so my why is I want to be able to touch thousands, if not millions, of people's lives through my artificial intelligence that's built in through here, that we've programmed into the app, that helps you spot things that might be erroneous, might be inaccurate, incomplete, or unverifiable, so that you can utilize federal laws to your advantage and just use the power of automation, where it analyzes your report, it prepares a customized game plan that's tailor-made for your specific needs, and then it creates letters for you that you can ultimately control. So you are signing your name to them, you're affixing identification that proves your identity, and then you have the ability to either approve letters, edit a letter, deny letters, recreate letters, all within milliseconds. It's very secure, it's very anonymous. But in exchange for me doing that, in exchange for our partners getting behind this, I would also appreciate it if you show me some love too. So you can do that by subscribing to all of our social media pages, YouTube, Facebook, LinkedIn, Instagram, Twitter, Snapchat, that sort of thing. So subscribe to those pages, like us, rate our app, write a nice review. Somebody dropped a great review on our live stream, I believe from yesterday, that mentioned, I think that they said that they got like 45 deletions off of their credit reports, and that's fairly typical. It's not out of the norm. We've actually had instances where people have had over 100 things deleted from their 3 major credit reports, from Equifax, Experian, and TransUnion, and seen some drastic, amazing results whenever it comes to scores. They also had a couple great suggestions. They'd like to see another couple of letter types added in there, which both of those were on our radar, and those will be future feature releases. So if you happen to be watching this video, I think it was Dylan, I can't remember the exact name, but anyway, Dylan, if you're watching this, that was not lost on me, and we really appreciate your comment if you're watching me right now. Also on that note, it would mean the world to me if you recommend us to all of your friends, family, co-workers, enemies, exes, it doesn't matter. Tap the hamburger link that's in the top left corner of the mobile app, the 3 horizontal lines, and I think the 3rd link down is a share feature, where you can tap that share feature and you can recommend us across social media platforms, through Messenger, through email, through text messages. And I would really appreciate it if you would engage with us here on these live streams. So if you're watching right now, I would really appreciate your feedback to let me know what other topics are on your mind, or maybe there's something about this live stream that I'm doing tonight about why did my scores drop that's valuable to you, that's just eating away at you, that maybe is a personal story and you're really looking for answers. Please drop those comments, engage with us. And if it's not during the live stream, if it's later, or if it's through our forum that's available in the app, please do that, because that's there for your benefit. So let's get on into tonight's topic about why did my credit scores drop. And the basic, what I want to say, the message that comes from that is, help! Help me, my scores dropped. I turned around, I did this, and my scores dropped. 911, we have an emergency. And, I think that that's a really important thing for everybody. Sorry about that. I see a comment coming in here. It says, I'm in car sales at a dealership in Cookeville, and I have been recommending this to customers who need credit help. Thank you very much, Thomas. I certainly appreciate that comment. Certainly appreciate your engagement. If you have downloaded the app, thank you. If you haven't downloaded the app, get into it. If you haven't upgraded to credit monitoring, certainly recommend that, because that will automate your journey and everybody else's journey, those customers that you're recommending it to. So again, I certainly appreciate that. So kind of getting back onto why did my credit scores drop, and it being such an urgent situation, because it's really frustrating. Credit scores are a game. They're playing a game with you. If you just look at it, especially if you haven't read my book, you need to read that. If you've downloaded the app and you've also upgraded to our credit monitoring, you also receive access to my book. If you haven't upgraded to credit monitoring and you have not accessed that, you can also get my book on Amazon, but you can get it as a free feature whenever you upgrade to our credit monitoring, so that you can have a better understanding of what I mean. But there are literally thousands of different credit scoring formulas, also known as models, that get used. So whenever you go apply, or one of your customers, Thomas, applies for auto credit at your dealership pulls a credit score that's using a certain scoring formula. And if you talk to your sales managers or your finance manager at the dealership, you'll discover from them that oftentimes when they're talking to one of your lenders about getting an approval for somebody, that lender might say that, hey, we're pulling a certain score, but that score doesn't match up with your score. And you're like, why? That doesn't make any sense. And then they say, well, we'll check a different bureau. That was Equifax. We'll check TransUnion, and then TransUnion's different. Or they went and applied for the loan down at the credit union, once at the bank, or they came from a different dealership up the street, and they said the dealership up the street said that they were a 625, but whenever you all pull it, it's a 582. Or they said that I went to Credit Karma, and Credit Karma said that my credit score was a 700, and you all pull it, and it's a 613. So there are a lot of different scoring formulas, and they really want you to be confused. They want you to seek help and hopefully go click on ads at some of these places like Credit Karma. They want you to go click on ads. That's how they get paid. That's how it's a free service. And they're only giving you 2 bureaus, and they're giving you limited information and no account numbers. And if you're trying to use their bureaus to dispute items on your credit, it's really difficult. And if you dispute directly through their website, you give up your rights. So all those things get covered in that book. So trying to get off a topic unintentionally, but I am a little bit. But you need to be aware that it's a game. You also need to be aware that your credit score, and I've covered this in a previous episode, is really, it's not sexy. It's called a bankruptcy risk indicator score. And you always need to remember that. At the beginning and end of every day, those 3 digits are identifying what your risk is of potentially filing bankruptcy. And if you think about it, whenever Thomas's customers at his car dealership go there for a car loan and a lender is looking at the deal, they want to know what the likelihood is, not just whether that person's going to repay the debt, but what is the risk of that person filing bankruptcy. Because if that person files bankruptcy, that debt gets eradicated. That debt is just null and void, okay? So at the beginning and end of every day, that credit score is really determining, it's really just indicating, not determining, it's indicating some level of what is the overall risk of this person filing bankruptcy. So whenever you do certain things on your credit report, you do certain things either that you're applying for, actions that you're taking, that you're running up debt, paying down debt, whatever it is, those all have a cause and effect, okay? And sometimes it's the things that you don't do that also have a cause and effect, okay? So one of those things, and I think we talked about it in yesterday's episode or the day before, that I mentioned scoring buckets, okay? So if you think about this, so why did my credit scores drop? And you know that it's a bankruptcy risk indicator score, and you know that everything has a cause and effect, okay? So let's say that your average credit limit across all of your credit cards is $3,000 limit, okay? And let's say that you have 3 credit cards. So on average, each of those 3 credit cards has a $3,000 limit each. So that you've got an average limit of $3,000, okay? So you're in the bucket where you have a limit of at least $2,500 average per credit card. Okay, that's the bucket that you're in, that you're scored against. Well, let's say that one of those credit cards charges you a $75 annual fee. And let's say that you really haven't been using that card, or it's got a really low balance, and you pay it off and you close the account. Well, now that you close the account, now your active average limit is still $3,000 in that instance of the two remaining open cards. Okay? Now let's look at it as what if you had an average limit of, or let's say that you had a limit of $2,000 each on two of those credit cards, and you had a $5,000 credit limit, and the $5,000 credit limit one was the one that you decided to pay off, or it was already paid off, and you closed the account. Well, now you have two credit cards. They each had a $2,000 limit, so now your average limit is only $2,000, which falls below the $2,500 credit limit, by the way, which is one of the buckets. What is your average credit limit? Is it greater than or less than $2,500? It's very achievable. It's attainable, so it's not out of the world. It's not like, is your average limit $25,000 or something? But now that you're below that $2,500 average limit, that can have a profound impact on whether or not you are at risk of filing bankruptcy. Now, here's a way that you might look at it that might make a little bit more sense to you. But I know it sounds kind of negligible, but they look at historical data. And if you have a credit limit that's lower than $2,500 on average on credit cards, the reason that you might be more at risk of filing bankruptcy is because you haven't been able to attain higher credit limits, okay? Because you must have had other risk associated with your potential filing bankruptcy, so the credit card vendors would not increase your limits, so therefore you are a higher risk of filing bankruptcy than somebody that has average limits over $2,500. And I know that it's a little bit of semantics there, because it could easily just be that you had an average limit of $5,000 and you shut down a $10,000 or $15,000 credit card, and now all of a sudden that changed your average credit limit and moved you below that threshold. So just kind of keep in mind that's just one scenario, but I'm trying to give you an idea of like how a bucket might play out. Or it could just be simply that you didn't have a bankruptcy and now you filed a bankruptcy. I realize that your risk of filing bankruptcy changes once you do file a bankruptcy. Technically, you're not supposed to be able to refile, but I will tell you that there are numerous times that you'll look at somebody's credit report and they'll have multiple bankruptcies on their credit report. Maybe they filed for Chapter 7 bankruptcy protection, but then the bankruptcy was kicked out of court and it was never discharged, never allowed to proceed. The trustee says, no, you don't qualify for bankruptcy, or you don't qualify for a Chapter 7, but you qualify for a Chapter 13, and then you started down the path of the Chapter 13, and then you weren't making your plan payments on time, and now all of a sudden you go back and you refile for bankruptcy again. So it still could be a risk of filing bankruptcy even if you already have a bankruptcy on your credit report. So just keep in mind that it's a bankruptcy risk indicator score. You have cause and effect that can cause your credit scores to drop. And there are buckets that also factor in. And Thomas also just asked a great question. Is the pro subscription the way to go over light? Yes and no. Either way, you need to get started. Okay. If you get started, you're using the power of automation. Your light subscription does so much more than typical credit monitoring services provide. However, the pro features, the value that's in there, if you can afford the small difference, the little $10 per month, for you to go to the pro provides you with so much more in identity theft protection, and some other features that you unlock compared to the light. So I would ask you on an individual level to toggle back and forth between the light subscription and the pro subscription to look at those features. And one of the tangible things that you might want to consider whenever you're facing that choice is whether or not having $1 million identity theft policy protecting you is worth it to you. Okay, because as you're going down this journey to improving your credit, you want to make sure that you're also protecting yourself from identity theft. And identity theft has a real risk to it, not only to impacting your credit scores, especially, and you know how it is, Murphy's Law, things happen whenever they're least expected, and they usually happen whenever you don't want things to happen. So let's say you have your identity stolen, and somebody's going out there charging things up and not paying stuff, and the next thing you know, your credit score's tanking. That's exactly when life hits and all of a sudden your car's totaled, you need to go out and buy another car, and you've always had 0% financing, but now because your credit score's just tanked because somebody stole your identity, now you're dealing with all of a sudden somebody's hitting you with the reality that you got to pay 22% on your next car loan. That's got to suck. So the great thing about the $1 Million Policy is we actually provide you with a true white glove service where we will take care of restoring your credit identity exactly back to the way it was. And the typical cost out of pocket, if you did this yourself through attorneys, on average is over 30 grand. Okay, so in my opinion, the $10, just that one feature is worth it, and there's a lot more available. So again, that's a personal choice. Great question. So appreciate the engagement. You need to log on and check out our live streams all the time. And if you haven't watched some of the past live streams, I recommend it. And you can also use our share link to share YouTube live streams with other people that you know or across social media like Facebook. So we appreciate your engagement. So I also want to talk about, here are actually some getting into the meat of this now. Why do my credit scores drop? And oftentimes it's really simple things that you don't know about because you don't have credit monitoring. And that, again, right there, Thomas, is why people just need to start, whether it's light or pro. By the way, you can always upgrade and downgrade. So if you start with light, you can move to pro. If you start with pro, you can move to light. You can go back and forth. So just kind of want to make sure that you know that. So, but one of the most common reasons why scores drop is because there's new bad information in your credit file. You just didn't know about it. There's a new collection. It's as simple as that. There's a new collection, or you just didn't know how to read your credit report and you're just overlooking the simple things. It could be that there's a new comment on a trade line. A trade line, again, is any credit account that's reporting like creditor name, account information, dates that your account opened, the current date of last activity, your balance, your limit, your payment history, that sort of thing. That's a trade line. So it could be a remark on a trade line changed. Maybe you were disputing something, and maybe now it says out of dispute resolved, consumer agrees, something like that. And it still may have some bad information on your on that trade line. It might show some late payments. Well, the thing is that while your account is technically in dispute status, before the investigation is complete, that item is suppressed from your credit score temporarily. That's also another reason why when you go to apply for a home loan, they will not make you a home loan unless you get the consumer disputes comments deleted or suppressed so that they can re-pull your credit scores, because they want to see your real credit score, not the credit score that's suppressing some of those disputed accounts. So as soon as it stops being disputed and the investigation is complete, that little simple thing can cause your scores to go up and down, up and down, up and down. It can be a little bit of a rocky ride whenever you're first getting started in your repair process, but you just need to understand that credit score's a game, and there's a little bit of a journey to it. Now, the great thing about our mobile app is it accelerates that process for you so that you're not having to be a credit expert, so you're not having to analyze your credit reports, so you aren't procrastinating in any way, and that you still have power over this. So keep in mind that our app is looking for those language variations. It's looking for the remark variations if something's out of dispute, if there's a new comment that something was settled for less than full balance, that sort of thing. It's looking for those things. But to the untrained eye, that causes that question, why did my credit scores drop? So another thing is just new late payments can appear. It could be that you closed that great old account. It could be that the creditor closed an account and you had no idea it was coming. Because remember, creditors, especially a credit card vendor, they're constantly monitoring your credit files, utilizing what's called a soft inquiry, just like credit monitoring. Soft inquiries don't hurt your credit rating, but allows them to get a glimpse at your credit file. So they're basically looking for summary data. It's probably not an individual's eyeballs that's looking at your credit report. They're just going through en masse, just using an algorithm to determine whether or not there's been major changes in credit files, if there's been a whole lot more debt that appears now, that sort of thing. And if there's anything that triggers something that just sends off an alert to them, sometimes it can result in them closing a good, positive account regardless of how long you've had it, or they could also reduce your limit too. That happens all the time where somebody's got a $5,000 credit card limit and then overnight they reduce it to $3,000. Guess what? If you had a $3,000 balance, you were only using 60% of $5,000, but if they reduce your limit now to $3,000, now all of a sudden you're using 100% of your limit, and because of that, bankruptcy risk indicator score. Now all of a sudden, ding, 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 911, we've got an emergency. There's a reason to penalize you and lower your credit scores. So oftentimes, it's not always the things that you're doing that causes your credit scores to drop. Another thing could be that you took an action like you paid off a loan. You paid off a loan and you don't have a thick, currently active credit file. You've got a thin credit file, or you've got a lot of credit history, but you don't utilize credit very often. And if you pay off accounts too soon, that can cause your scores to dip as well, just because let's say you went out and got a $30,000 truck, okay? You put down $5,000. You just wanted to establish some credit. And they had a special offer that if you financed that truck, that they could get you 0%. And there's no prepayment penalty. Or we're going to get you $500 additional off if you do your financing with us instead of you going direct to your credit union. That could be what the car dealership's doing, and that's fine if you choose to do that. However, the problem with that is that if you turn around and you pay that off in 60 days, 90 days, 120 days, you have not established a track record of a longer payment period to demonstrate that you have the financial capacity not only to make that payment, but to make that payment for a sustained period of time that would indicate that you are capable of maintaining that payment and you're at no risk of filing bankruptcy, okay? Because it does not know. Remember, credit reports don't know your monthly income, okay? So for all that it knows, you got a scratch off. You hit a scratch off, and it was enough for you to pay off your balance, so you paid off that balance. It doesn't know that you've been saving up and you've got $3 million in the bank. It doesn't know that. So you need to be aware that credit reports don't know your income. It doesn't know your job time. It doesn't know your residence time. It does know how long you've had a mortgage open. If you have a mortgage open, if you're renting, it doesn't know that. Are there rental history reports that are available out there? Yes, through different credit agencies. There are sub-agencies. We've covered that topic in previous live streams. So there's always a cause and effect. There are always things that cause credit scores to increase as well as to drop. So another thing that can happen is that you had some balance and then you took it to no balance. A similar thing is what I was talking about with the truck, except for on a credit card. This one might shock you, but you're at more risk of filing bankruptcy if you have a zero balance on a credit card, or if you have a balance that is right up to the limit or at the exact limit of your credit card than somebody who is, or let me back this up a little bit. So if you carry little small balances, 1%, 5%, 10%, 30% of what your limit is, you're actually at less risk of filing bankruptcy than the person with a zero balance. The person with a zero balance historically shows that they will file bankruptcy more often than the person that's actively using credit. There's a thing I believe that I've seen that it has something to do with like people once they reach retirement age, even though they weren't carrying credit card debt, will either just go file bankruptcy to waive remaining debt that they have so that they can sail off into their retirement years without debt, or the other one is that the people with no debt will go out and charge it up immediately, right up close to the limit, and then file bankruptcy. But interestingly enough, let's say that you've got $10,000 worth of credit card debt, you have $10,000 worth of limit, you are at more risk of filing bankruptcy than the person that has that same $10,000 limit, but collectively is at $10,500 balance that's slightly over your limit, because people that are slightly over their limits historically usually correct that behavior and pay it back down under the limit shortly thereafter, after they go over their limit. So again, that causes some score changes because of buckets and bankruptcy risk, so scoring models. So another thing that could affect whether your scores drop overnight or not are credit inquiries. Again, this one kind of speaks directly to Thomas again, is that whenever somebody goes in and applies for a car loan at a dealership, that car dealership might submit that loan to one lender, 3 lenders, 5 lenders. Let's say that you've had some credit issues and they say, let's send it to 5 banks. And those 5 banks are all declining it. The sales manager is often going to turn around and send it to another 5 banks. And if those 5 banks don't approve it, then they're going to send it to another 5. I'm not saying that your management team at your dealership would do that, Thomas, but it happens a lot throughout the industry. And those inquiries that are all lumped together within a 14-day shopping period from the same industry type are not supposed to have an immediate impact on credit scores. However, if you think about the places they're submitting those loan requests to, some of those lenders might not be, they might be a credit union. Some of them might be a bank. Some of them might be a automotive lender that's like the manufacturing arm, like a Toyota Motor Finance, Hyundai Motor Finance, Kia Motor Finance, Ford Finance, that sort of thing. So, and then there's also finance companies that they might be submitting to. So those could be different industry types. And because of the mass inquiries that happen all at once, especially if that person is also shopping at other dealerships in that same period of time, that can really tank scores. So the mobile app, CreditUturn mobile app, does work on inquiries on your behalf also. And I think I'm answering Thomas's question here, because Thomas is asking, so our credit score takes a hit because of inquiries on our report. Is there a downside to me approving the dispute letters for the inquiry? No, there shouldn't be any downside. You do have the power to toggle on or off items that you don't want to dispute. So let's say that you're looking at a letter for credit inquiries to dispute inquiries, okay? I'd always make sure that you look at your letters and make sure it makes sense to you. So if you recently obtained a home, let's say an auto loan, and that auto loan was from Hyundai, okay? Hyundai Motor Finance approved you. And if it shows an inquiry from Hyundai Motor Finance to be disputed, I would tap the edit button that's in the lower right corner of your mobile app, and then go to where it says Hyundai Motor Finance, and I would toggle that off, and then I would save, and that will recreate that letter within milliseconds without you disputing Hyundai, okay? The reason why I would suggest that for you, if that instance was to occur for you or anybody else that's watching this live stream, is because you don't want to dispute credit inquiry, a credit inquiry, okay? I hope you're listening. Don't dispute a credit inquiry from a place that approved you and that you obtained credit from. Okay, so it's not just the approval, but you obtain credit from. And the reason why is because if you dispute a credit inquiry from Hyundai Motor Finance, plus you also got your loan from Hyundai Motor Finance, that might trigger a fraud alert on their part, that they think that maybe that loan was obtained fraudulently, and they might delete the inquiry plus also the positive trade line. Now, if you're making payments on time, that good account will reappear in your credit file. And it's very important for you to know that if you ever have a positive account that's removed for some reason, because you got to remember there are computers that analyze dispute letters. There are also people that analyze dispute letters. people as well as computers can make a mistake that might think that you're disputing a current Capital One account that you have, whenever you're really not disputing that one. You're disputing a 6-year-old Capital One account that you had with an ex-spouse. I've seen sometimes where they'll delete the good account, but the good account always comes back as long as you're making payments. It's going to pop back up on your credit report. So really not a whole lot of risk other than just use some common sense. If you ever have questions like this in the future, Thomas, feel free to ask on our live stream. You're also welcome to ask these questions in our forum. By the way, we are not acting as a credit repair company. We're not acting as an attorney. I am a software as a service mobile app provider that's bringing you valuable credit tips and education, that's here to answer any questions you have for you. I'm not going to personally analyze your credit report. That's what the software is there for. We're educating you, and you have faith. You can have faith that the software knows what it's doing. At the same time, you're more than welcome to use your common sense and or override something if you want to. So appreciate the feedback and the engagement. So hopefully that answered that question for you about inquiries. Again, is there a downside to you approving the dispute letters for the inquiry? Not so much, just as long as you didn't actually obtain the actual financing through that place. There could be one that slips through the cracks. So hopefully that answers that for you. Awesome. Glad that helped you. So again, kind of back to the initial thing about inquiries. If somebody's shopping at 2 or 3 or 4 or 5 dealerships, and they're running up a lot of inquiries, I've seen actually a personal record of over 200 credit inquiries from one consumer in less than 30 days. And it's not them that's going and doing it. It's the sales managers at every dealership that's doing it. And I actually, on that same consumer, I saw the same dealership resubmit to all of the numerous same banks. And what they were doing is they were resubmitting the same person along with different co-signers trying to make something work, or co-borrowers to try to make something work. So I think that I've been chatting just a little bit longer than I normally do. I've usually been keeping these to somewhere around 22 to 28 minutes. I think I'm getting close to 37, 38 minutes here right now. So I want to thank you all for your time tonight. Really appreciate the engagement, Thomas, and getting started, and you also recommending CreditUturn to all of your customers. And I definitely encourage you to talk to your managers at your dealership, unless you're already at a CreditUturn dealership, and explain to them how your dealership has an opportunity to differentiate themselves from all of your competition in the marketplace. Plus, we also offer some digital solutions to help drive more traffic directly to you, so you have more opportunities to make sales, and to show that you're different in your marketplace as well. So on an individual level, plus at the dealer level. So we have the ability to drive immediate deals to you that are shopping at your competing dealerships that are in your marketplace, as well as also attracting people that might be walking through like the bankruptcy court, or through courthouses or social security offices, or they're going to like pawn shops or places to get loans, or check cashing or rental stores. So my passion is to help everybody who's ever had a credit problem, not passing judgment on anybody, because I know that credit problems can happen to anybody from any walk of life. So thank you all. Please help us make this go viral. Share us, and peace. You all have a great night, and we'll see you tomorrow.